make the wise decision. Because again, you never want to go into debt, but if you do, you want to do it wisely.
Hey, what's up, everyone? Thanks for tuning in to the Creative Table. With us today, we have our special guest and friend, David Smith. He's an expert in small business banking and credit. Dave, thanks for being here, man.
I appreciate it. Thanks.
Now, I know that this is a topic a lot of people might just skip right over, because I know as creatives, we love to get into the exciting, work that we're producing or going after and creating and so forth. And it's easy to sort of bypass or overlook or fall into this sort of pit of, the financial side of things. Am I right? So this whole thing of, hey, I need to pay attention to my books, to the money I have, the money I don't have, or what's coming down the road.
You're an artist, but if you're an independent, you're also a business, and you need to address both of those, and you need to grow in both of those areas.
That's
right?
Great point.
Absolutely.
So just before we dive in, just the idea of money. We hate to talk about it. We hate to, some people, hate to get into the subject, and negotiations can be sticky, whatnot. But at a high level, what is money? How should people be thinking about it as a business owner?
Well, at the end of the day, it's why we do what we do, right? We paint, we do music, we create things because we want to earn a living. And this is how we choose to earn a living. So you can't ignore that aspect of it, right?
Mm-hmm.
Getting out and being creative for the day is fantastic, but earning a living is a little better. We like to eat indoors. We like to eat real food. It helps, right? So you need to be both a creative, whatever that is for you,
yep.
And you also need to be your own CFO. That is a chief financial officer of your own business. You need to know what money's coming in, what money's going out, how often that happens. Mm-hmm. And you need to, at the end of the day, if you need more money and need to go to a third party like a bank or a financial institution, you need to be able to present yourself to show the reality of who you are financially, mm-hmm. and who your business is financially. Yeah. And that means you have to be a chief financial officer of one.
It doesn't matter how good your portfolio looks, if your finances, your finances need to look as good as that portfolio does.
How many artists died poor, right? That's the thing. And when you need money to do more things, when you need that newest guitar, when you need that
latest piece of equipment, or
some sort of piece of
software
equipment that you're dependent on, and you don't have the cash for it, or frankly you don't want to lay out the cash for it, you want to pay it over time, you need to be able to present yourself as somebody who knows how to manage money. And if somebody lends you money, you will pay it back, and both you have the willingness and the capability of paying it back.
Okay, so all that to say, my first expense when I'm starting out is my small business as a creative. Let's talk about that.
Your very first expense, it's not your guitar, it's not your equipment, it's not your software, it's not your office. It is your financial software. I'm going to use QuickBooks as a generic term, but it can be literally anyone on the market, mm-hmm. because that's where your money goes. Your money, yes, it goes in the bank, but it's accounted for in said software. So when you do have to go to a bank or present yourself or pay your taxes, you're going to have to know how much is income, how much is expense, how much is this, how much is that. And you do that in those pieces of software like QuickBooks.
I can't just keep all my checks and balances on a piece of paper in a shoebox.
Receipts in a shoebox are done, right? Just like, a lot of people have moved from physical art to digital art, right? Mm-hmm. Same concept. Move off the books, move into QuickBooks.
Mm-hmm. I know that when I first started out, it was like TurboTax and like Google spreadsheets and all this kind of mess. QuickBooks, it allows everything to just
funnels in one area, and
you can give your CPA access.
I was about to say, when you get an accountant, which is again probably the second or third thing you need to spend money on, yep. is that person can look into your books. That person can also upload templates that they want to utilize in QuickBooks, because they know all the financial software, and they've set up their own little reports, their own little templates, because when they go to download your information for taxes or something like that, they're going to download it in the format that they want it, put it in a report, and then export that into some other piece of technology, right? So that's why you need to use a common, and let me stress this, a common financial application. The free ones are good, but if they're not well liked or well adopted, then you're you're hurting yourself. You're really limiting yourself.
Yeah, because there are some good ones out there, but then you go to link your bank and it's like,
we don't connect to that one.
Yeah. Oh, it's terrible. So we got QuickBooks. We're in the basics here, but let's dive in a little bit. I'm a small business owner. I want to get going here. Talk to me about what do I need to know in regard to if I need to get some capital raised quickly or some access to some capital to begin whatever it is I'm doing.
Yeah, so you're going to go to a bank. You're going to go to a financial institution of some sort. I'm going to use generic bank, and I'm talking anything from Bank of America to community bank to credit union to what we call fintechs, and that's like your Cabbage, your OnDex of the world kind of thing, right? There's various places you can get money. Predominantly, you want to start with a bank that you have a relationship with. If you're just starting off, the banks are going to look at your consumer data, right? They're going to look at your checking accounts, your personal tax forms. And then as your business matures, they're going to start looking at more and more of that business information. So start with a bank that you have a relationship with. That's assuming you have an account where you haven't bounced a bunch of checks, right?
Right.
That's been in a positive for a bit, right? Because frankly, if you're one of those people that bounces checks all the time, your income goes in the negative.
By bounces checks, we mean the account.
You go into the negative. The account goes
not
into the negative. Not
that you're writing checks, but
you know what I mean. You're returning stuff. Your accounts go in the negative. Pulling out the ledger, the stuff I just told you not to use. So you need to go to the bank that knows you to start with. Start there, and then you branch out, right? And people always ask me, do I go to a big bank? Do I go to a small bank? And it really is based around your needs, right? If you've been banking with a large bank, then stay with that large bank. If you've been banking with a small bank, stick with them. Again, who do you know? Then it goes around. It's centered. The concept is centered around what do you need, right? Your larger banks are going to give you better technology, better ways to move money, better ways to look at money, more of those financial applications to integrate into, right, and download information.
Yep.
The smaller banks are going to know you a in more, right? Yeah. That's sort of, I'm using a lot of generalities, right?
In
personal banking, community banking, in generality. So they're going to know you. They're going to know your history. They're going to know the location. They're going to know things about the area that feed into things that you're going to ask about. And that matters. I'm not saying at a big bank you're a number, but in general, you're a number. You're a number, right? But again, it comes down to services and technologies, really. If a community bank has really good technology and service, they're giving you everything you need. If they don't, then you need a big bank backup to quickly funnel money to then disperse to vendors or partners or subcontractors, et cetera, et cetera.
Yeah, so that's a really great point, because I know when I started out, I should say myself and even our team, we just had this idea like, okay, here's our bank, right? Like, who should we bank with? But you can have multiple banks at your disposal, right? I mean, we can go and have our relationship-centered, community bank where everyone knows your name and your family, and you can move quickly on the relational side to get some things set up. Right. And then also have an account or several accounts at a larger bank that you need to, take advantage of the technology that you mentioned, and then you can funnel and transfer between the two and have the best of both worlds. And and there's also, of course, those online banks that are strictly no brick and mortar presence, right?
So a hybrid bank solution allows you to work digitally and remotely, because that's the world we live in, right? I don't have to connect with just people in my community. I can connect with people literally around the world, right? And that's going to stay, and that's going to be enhanced. So you may start working with other creatives that are not in your community. So you need to transfer funds quickly over different types of systems, ACH, Zelle, Venmo. And if your bank doesn't participate with those, you need a bank that does, right? So a bigger bank is going to give you more national and international flexibility, but there's something to be had about a community banker that knows you, knows your experience, talks to you, sees you face to face, sees your work product, right? It's one thing to say, oh, I'm a musician, but if they can go to a concert and see you bringing in 500 people and the tickets related to that, oh, this person's legitimate, right? If they can go to an art show or they know of an art show that's happening where you're presenting your talents, then again, that's the tangible thing, because you're not a hardware store where I can walk in and see foot traffic. You're not you don't have inventory with widgets. Your widget is your art. Your widget is how many contracts do I have? What kind of throughput am I working with, right? How many videos am I producing? How many pieces of art have I been consigned to do, right? That sort of thing.
Yeah. So diving in, I mean, let's address the elephant in the room, right? If we want to take out a loan or to leverage the relationships at the bank to gain access to capital to build a business, I mean, let's be honest, nobody wants to go into debt, right?
No, that's not necessarily a great thing, right?
Yeah, but you hear all these things about leveraging debt and
it's necessity.
There's a healthy way to.
There really is a healthy way to approach debt.
So let's talk about that. What do we got?
Yeah, so you can look at debt from a few positions to where you need capital to start a business, and that's either to buy widgets, right?
Now, when you say widget, to me, I'm thinking of my app on a phone. What do you mean?
Or some sort of equipment, right? Some sort of equipment, be it paintbrushes, be it the software, be it laptops, desktops, the 5K monitor, a new whammy pedal, whatever that may be, right? Whatever
the thing you need to do what you do.
The thing you need to do to do your job, right? Or you may need to hire people, right? If you're a baker and that's the way you do creative things, you're going to need people to work with you, to do other things, right? You're going to need boxes to put your cupcakes in. You're going to need this to do that. And, you may or may not have that money to start. Now, the question is, are you right-sizing your start, right? So, if you've got a good camera and you're let's say you're a wedding photographer and you've got a pretty good camera, it's not the latest technology, but it's pretty good. Are you going to go into debt because you want something or you need something, right? Do you go into debt because this is going to earn you more money, or it's going to produce a better product, and there's a dollar attached to that, right? Because
basically investment versus expense, right?
Investment versus expense, exactly. Sometimes you need 4 cameras for a shoot, and you've only got 3. The question is, do I rent the 4th camera or do I buy the 4th camera? Right? Well, if you're moving up to where you need 4 cameras on more and more shoots, then at some point you're going to decide to buy that 4th camera because the rental expense is eating into profits as a little more than buying the camera would, right? Also, things you need to think about is how often do these things turn over? In other words, I'm going to use camera as an example. My apologies. How often does a camera technology last, right?
Yeah, before you got to replace it,
before you have to replace it, update it, before you're just way behind, right? Same with monitors, stuff like that.
Computers,
right?
especially.
If I'm borrowing 5 years on a 2-year camera, right, that's a bad investment. You might want to rent. But if I have to borrow money for paint or borrow money for canvas or borrow money for, again, I'm going to use the term widget, that thing that you need, right, then you need it. You absolutely need it. And that's a little different than want. And it's more of an expense. This is just my cost of goods.
So if I am borrowing money and I decide to go that route, at some point there's a tipping point. I say, okay, I need to borrow. What types of loans are we looking at that are available? Okay,
so a couple types of loans. There's what's called a term loan or an installment loan. That's kind of like your car loan, right?
Okay.
You borrow $40,000, you pay back X number of dollars a month. That's static until the loan's paid off.
And that's called a term
loan or installment loan.
Yep.
Then you have a line of credit, right? To where you say, hey, I'm going to ask for $100,000 because I need $50,000 now, and I probably need another $50,000 in a few months, and I only want to go through this pain of applying for a loan once, right?
Yeah, and that's a whole other thing we can talk about.
A whole other thing we're going to talk about later. But there's a line of credit, and again, that's a little dangerous, right? Because it's not fixed, and you can draw off of it when you want. But the more you borrow against that line, the more you have to pay back, right? So, and then there's the third type of credit that's just really common is a credit card. And that is a sort of an entry level credit for business. A lot of the big banks are going to push you to a card. That's why you see the Spark card and the Amex and those things.
Cashback, what's in your wallet, all that stuff.
All that stuff, because it's the quickest and easiest way to decision for that. In other words, the application process is quicker, right? I put in my name and address. I put in my social security number. I put in my business information. I click OK. I wait 10 seconds. I get an answer back, right? Within 7 to 10 business days, if I was accepted, I get the plastic and I'm good to go.
Is it faster for that just because, hey, there's more opportunity to earn off of you than the other things? Like I know like with the credit card, you're looking at maybe 20% interest over here, line of credit, maybe you got 4%. So I'm much more rather you be making me 20% than 4%.
That and I can shut off the credit card pretty quick.
Okay.
Right? If you're late 2 months in a row, I shut that off.
Yep.
I'm not exposed to you as
the risk
any more
management,
than that.
I guess. On that.
From the bank's perspective, they can manage that risk a little better. They can manage those limits a little better. They can start you off small and take you up. Whereas like a line of credit is boom, flat amount. Now they can take that down due to bad credit, but it's a little easier on the card side.
Makes sense.
Yeah.
Okay, so we've got term loan, line of credit, credit card. Talked about the application process. It's easier to jump into the credit card. When does it get difficult as I move in, down the line of these things?
Yeah, so a couple things. The more money you request, the more complicated the application process is going to be. In general, the smaller the bank, the more complex the process is going to be. The larger banks have more, it's called analytics, more decisioning. They're looking at credit scores and models. More risk, but mainly they're doing it better.
Because I always thought the smaller banks were going to be more easier to get money from because they know you and they're like, yeah, come on, we understand your business more as a creative than a big bank would.
They're also more risk averse though. Yeah. They want to prove out the numbers. They're going to present you to a board. They're going to present you to a committee.
For approval on all these things.
Jill at the bank's job is on the line if she gives too many bad loans. Yep. Whereas Jill at Bank of America, it was the model that made the decision. So if they're incurring losses, it's probably not Jill's fault. Right? Yep. But Jill at the small community bank, her job's on the line because the larger banks are relying on more technology. It's called machine learning, AI. Artificial intelligence, AI, all that stuff is cranking. That's why they can make the 10-second decision and consume so much data. Whereas the smaller bank, they're going to consume a lot of data and it's going to take a day or two, but they're going to process every bit of it. And it's largely going to be a manual process, maybe with some automated decisioning involved, but a manual process. So the more money you ask for, the more complicated the application is. The smaller the institution you go to, the more complicated, again, in general, the more complicated the application process is. And then what I didn't talk about earlier is when you flavor in a small business administration loan, that's government paper, that's government bureaucracy layered on top of that. So I guess the fourth type of loan is an SBA loan, Small Business Administration, and that's going to add some complication to it.
So what kind of numbers do I need to know as a small business owner in order to gain access to these different lines or types of credit?
Yeah, so there are four things you need to know. First is cash flow. How much money's coming in, how much going out?
Right.
Are you positive or negative?
Right, real simple, right? That whole roof over the head, food on the table.
Am I eating daily? Am I taking showers? Can I use the water?
Afford gas for my car?
Does the phone turn on today?
Yeah, did the light come on when I turned on the switch?
All that's important to know, right? And you generally know when you hit the switch.
Right.
Second one is your balance sheet, right? Assets versus liabilities. It doesn't get much simpler than that, right? Or is the worth of your business positive or is the worth of your business negative?
I've heard on the side, you've got 5 years or something to get your business in the green or in the black?
Generally, it's 3 to 5 years. People are expecting positivity. That's why if you're...
You can't just start a business and then be in the hole for that point forward. The government's going to go, all right, you don't...
Well, that's why a number of banks will not do business with you unless you're 24 months or old.
Yes, that's a big point. Yeah.
So
I'm sorry, you're not 2 years old.
You're not mature enough. Yeah. Basically, your books look like garbage, right? Your books are a hot mess because you've got a lot of expense. Even if you have a lot of income, that expense is weighing you down.
Takes a while to get a snowman going.
It really does.
I just wanted to ask about that real quick. So you've got your cash negative or cash positive, your assets and liabilities. What else we got?
Your income statement, right? How much is coming in? Where, in what buckets did that money go?
Like on a monthly basis kind of thing?
Yeah, monthly or regular, depending on how you do that. But they're going to ask for monthly, maybe quarterly. But, it depends on how you do your business. The bank can usually adjust, right? And the next one is your debt service ratio, right?
Okay.
If you have debt, how much are you spending a month on that debt? And that can be mortgage, that can be credit card payment, that can be installment payments, your line of credits, whatever. How much are you paying on your bills?
Right.
Your credit bills, not your electricity, not anything like that, but your credit bills compared to your income. Mm-hmm. And then in general, there's a thing called EBITDA, which is earnings before income tax. And you need to know that, right? How much do I make before tax? How much do I make after tax?
Okay.
Right? Because that's really, you have to pay your taxes. And that's another thing.
We're
folks.
creatives, but don't get creative on the tax.
You cannot lie to your wife. Don't lie to the IRS. All right? Plain and simple.
Terrible. Don't lie to your wife. It's way worse. You'd rather go to jail.
Someday.
Yeah.
Someday.
You'd be safer in jail.
Right. But no, you really need to get the tax thing done first. That's what the accountants can help out with. That's what QuickBooks can help out with, et cetera. But after that, how much money do you have to work with is basically the answer.
Okay.
Once you get a check in, because again, that $5,000 check is not always $5,000. It's $5,000 minus a bunch of stuff.
Okay.
And you got to figure out what that bunch of stuff is.
Exactly. Yeah. There's nothing worse than like thinking, hey, I got all this money. This is great. Oh, man.
Yeah, exactly.
I didn't think about, I got to pay this person and that person and take this part out for that and pay the tax and da-da. Oh, I've got,
Yeah, who's FICA and why is she taking my money?
Yeah.
Exactly.
When the bank is looking at you, we've just talked about all these different kinds of information you have to know about your business. What's the data that's most important to them, or how do they see you as a small business owner? What are they looking at?
Yeah, so first of all, they're looking at you as a business, right?
Okay.
So you may be unattractive as a consumer to go get a car loan, but you may be attractive as a business, right? And I'll get into the details here in a second. But generally, there are 4 areas of data that banks look at when you go to apply for a loan. And I'm assuming this is a small dollar loan. When I say small dollar, under like $250,000, right?
Because that's what we all think of as small. Let's go. Okay.
So small dollar loans. Small dollar loan under $250,000.
Can't remember last time I applied for less than $250,000.
It's just pocket change. It spills out. Right? It just that in a couch.
Yeah.
So when you go to apply for that loan, and I'm assuming it's a small dollar loan under about $250,000.
Okay.
They're going to look at 4 areas. One is your consumer credit, because you are a small business. You're not a large corporation. You're not publicly traded. You don't have a CFO per se. You are your own CFO. So your payment habits and how you deal with your finances reflects a lot of how you deal with your personal finances, right?
Okay.
Plus, as a small business owner, your finances are very commingled, right? Especially when you're in a startup. If it's just you you may pull out of your pocket to buy office supplies or a printer or print ink or something like that, and you just won't go use your business account for that. It's all mixed up. So they're really looking at your consumer report. The good thing is your consumer report can look a little worse because they know small business owners have a profile, right?
Yep.
You do mix a lot. Your credit score may be a little lower, that sort of thing. The next, they look at a business report. And this is when we get into the concept of, do you have a business report, a business credit report? And here I'm talking about an account with Dun & Bradstreet, Experian Business, Equifax Business, those organizations. And we can discuss this a little later. Then they look at what's called application data, which is how long have you been in business? How much cash do you have on hand? How long have you owned this business? Because if you just bought Sal's Pizza, and Sal's Pizza has been in existence for 50 years, and you just bought it, well, those 2 entities are not the same because you're going to treat it differently than the previous owner did, right? So if you're buying a company, then you start off with 0 years as owner. Okay. And that's neither good nor bad, but you can't rest on the laurels of others, basically. Then you get into financial data, and we just talked about that, right? That's your balance sheet, your assets, your liabilities, your debt service ratios, all that stuff, your current ratios, your quick ratios, that kind of stuff. That's the stuff that when you have all your data in QuickBooks and you create the report, it creates all that stuff for you. The bankers are going to call that a financial spread. They're going to take all your financial information, click a button, and create a bunch of numbers and ratios, and that's going to tell you how healthy you are as a business from a financial standpoint.
Good stuff.
So 4 areas.
Yeah, so you mentioned, going back a minute to Experian and Dun & Bradstreet. Experian is free, Dun & Bradstreet you got to go after?
Yeah,
all that? How does that work? And how necessary is it to have all that? Okay.
It depends on how mature you want to be as a business, right? I don't want to say how serious you want to be taken, but how mature you want to be when you're applying for credit. A number of companies, if you're dealing with larger vendors, they're going to want to know your business credit, right? It's called trade credit. They're going to want to know how you are to pay your other business vendors, right? Again, if you have a supplier, if you're using chemicals or paints and you're constantly buying them from a vendor, they're going to run your credit because they're extending your credit because they're giving you stuff and you're paying 30 days late, right? So it's kind of important depending on what kind of business you have, right? So you were correct to say Dun & Bradstreet. You have to go tell them that you exist. They don't go out and seek you out. It's called self-reported. So you've got to go sign up. You pay a fee. Fee's not small necessarily, but it's not big. But you do have to pay it. Whereas Experian, since they on the consumer side are constantly trying to find more consumers to sell reports on, they have that same mentality on the business side. Once you get business credit, you pop up on their radar and they start looking for information on you to build a report so that they can go sell that report to their customers.
Okay, so the get business credit that kind of starts when I apply register with the Secretary of State, or when I apply for my first business credit card?
When you apply for some sort of loan or credit card. Applying for the Secretary of State just alerts people that you exist. Right? I as a business exist. I exist with these principal people associated with the business. And here we are. When you go to apply for credit, that puts you on the credit radar. And so this is when you want to make sure as a small business owner, if you're applying for business or credit for the business, make sure it's in the business name. Some banks will give you personal credit and it won't credit your business. You need to make sure that the business is getting the credit for the credit.
I've always wondered about that. Like when I apply for a business card, it always wants my information as well. I'm like, wait, is this going to my credit or the business? The business name's on there.
It's okay to ask for personal credit because, again, the bulk of the data that they're going to rely on, especially the younger.
The business name is there.
Yeah, the business name is there.
But it always wants my information. I'm like, well, wouldn't you want to ask how much money the business makes? But they never do. It always just goes, how much money do you make? And then it...
Well, because again, if you're
this is on the credit card side.
If you're an S corp or an LLC, for a business credit card, that's all intermingled, right?
Okay.
So they're assuming that on a number.
I'm wondering if anybody out there is like thinking, why can't I just use my, what is it, American Express Black Card, or that like super card? Like who needs a?
And one of the new things is to use a solution like Yodlee or something to where. And
you're going to tell me what that is, because I actually don't know what that...
Okay.
So what is that?
So you utilize Yodlee, and basically you type in your bank access information.
Okay.
And the bank that you're applying for credit, you literally log onto your bank's website, and they suck down all your account data, all your deposits, all your outgoes, and they create a financial package on your own, and all you've done is provide your login to your bank or your credit union, and that. So
they'll provide me a loan and take care of everything if I just give them access to the information they need through my bank.
It shows your cash flow, right? It shows your business cash flow. So you've really filled out nothing and shown them nothing, but they're
sounds like it just removes the pain of the paperwork.
It does.
It's just
so good.
just put us directly at the table with the bank,
does. And sometimes you upload a tax form and they suck all the data off the tax form and take it from there.
Wow. Okay, that's cool.
But yeah, and the new technologies are doing that, and basically they just suck the data down, analyze it instantly, and they can present, basically a score or result, accept or decline on the loan. Okay. But that's why sometimes you don't enter the data; they just go get it. And there are lots of other background data sources. Like the first thing a lot of organizations are doing is verifying that you are with the Secretary of State, right? That you have a tax ID number.
You want to see your articles of organization. And
some make you actually produce those, right?
Yep.
And that's when you have to wonder, is this about to be a second job to complete this application?
Oh, yeah.
Or is this going to be quick and easy? Some it's second job. And again, the smaller the organization, generally the more second job-ish this is about to be.
Yep.
And again, if you don't have your numbers buttoned up, if you don't have that information at hand, it's a slog. I mean, you were just drudging through this, and
it's not a very exciting thing to think about, but you need to invest in the CPA. You need to invest in a bookkeeper, right? Or how important is the bookkeeper?
If you can keep your books, that's fine. If you make a habit of it, that's fine.
It's can't I just have if I'm paying for QuickBooks is keeping my books. Isn't QuickBooks my bookkeeper?
But you have to enter the data, right? Data entry still
QuickBooks
exists.
Sucks it down from the bank
sometimes,
and then I just
if
acknowledge
your bank's connected, right? But somebody has to make
an invoice,
I
just accept it, right?
Yeah.
I just go click, click, click.
But you have to create
accept.
the invoice in there. You have to create that invoice to go get paid to get money in the bank, right?
Yep.
So all that's related. So again, if you don't have a quote unquote bookkeeper, and sometimes if you're a sole proprietor, or a one-man band, literally or figuratively, then that's on you, right? That's on you to do that. And that's why I say just set a time every week to do that stuff, right? To take care of your finances for your business. Because you kind of do that personally, right?
And if you're married, right, a lot of times this is a great opportunity
farm it off to your spouse. Just farm it off.
A lot of people have that spouse that just, I love doing the book.
Nothing
Here you go.
makes life easier than, again, depending on the relationship.
Right,
but you need to make sure it's done, right? Make sure it's done. Make sure it's done on a regular basis. That, every Friday from 2 to 5, I close out my week by closing out my books. If you're not on a Monday through Friday schedule, pick a day, pick a time that's good for you. That's not your busy time. It's got to be downtime, because this is extra work. This is extra topical to your creative skill, right? Don't. If you write between 2 and 4 in the morning, don't do your books between 2 and 4 in the morning. Set that aside for another time. But it needs to be a skill, just like writing, just like drawing, just like graphic artistry. You need to hone those skills.
And if you don't want to hone those skills, you can
farm it out. You got to pay it.
Find someone you can trust.
Pay for somebody to do that, but it's got to get done.
And it's important, I think, for people to realize a good CPA is not. Again,
they're going to save you more money.
Yes, not an expense, it's an investment, because you're going to save money over what you would have paid otherwise, right?
Yes.
It's like, CPA, that's like over, several $1,000, whatever, $2,000.
It is.
It's but you would have paid.
Right.
I remember the first time years ago, our CPA showed me what we would have paid. I was like,
yep.
Thank you. Like that one change you made just saved me $6,000.
Yeah,
or $8,000
and it's those
or
little tips, those little tricks.
Yep.
They keep up with the tax laws. They keep up with the accounting laws.
Yeah.
I mean, imagine missing the sales tax update.
Yeah.
And you underpay your sales tax by 0.5%. And the stuff
or you missed the tax savings update, and
even worse, right?
Yeah.
That can cost you lots of money down the road. That can cost you headache. That can cost you audits. I personally was audited 7 years in a row when I was an independent.
You're a shady guy, dude.
Oh, dude, it stunk. But I know what flags the IRS is looking for.
Now you do, after 7 years.
Yeah, figure those out, right?
Can I just side rant for a minute?
Yeah.
Don't you hate those freaking letters that come those years the IRS wants something from you and they don't ever put in context what it is? Like, we found that such and such form, you need to, and you're just, I just remember going, this is another reason you need a good CPA, because I remember I'll get these forms and it's just like, I don't even know what this says, let alone what to do next to remedy what they're at. Like, hey, CPA guy, can you help me out? And he just goes, yeah, do this. Or, you actually don't need to respond to that. That's nothing. They're just shaking you down.
During the early days of cell phones, they wanted to know how many calls, how many minutes were for personal and how many minutes were for business. And they literally demanded that I go through my phone bill and highlight or black out. And the 6th year I was audited, I looked at them and said, no. And they went, okay.
All right.
I was like, wait, that was a possible answer all these years?
No, yeah, you're an idiot for complying. But,
exactly.
It helps that everybody's afraid of them, right? So.
Be in fear of the IRS, which is why you want a good accountant, right? The best offense is a good defense.
And a good accountant, you'll never get audited. Like their job's
to prevent that.
It.
Right? And they...
Because auditing itself, you talk about a second job, that's like having... I don't know, 4 extra jobs or something. It's just what they... Oh.
No, it really is a pain because then you better be organized, or at least at the end of the process, you are organized, right? But that auditor knows what the accountant knows what the auditor flags are, right? Yeah. Their software says, just like, even on your personal taxes, it'll say, oh, this is a possible audit flag.
Yep.
They know that for business. You don't. So that could save you money, in totality, but really just getting your expenses organized, getting, what can legitimately be an expense? What did I miss? Hey, I noticed you have a printer, but you never expensed paper.
Yeah.
That's, it's $10. I get that it's $10, but $10 minus whatever percentage you're paying in taxes adds up. Yeah. And that's their job.
Absolutely.
Yeah.
So I know one thing we've talked about before, which I'd love to touch on at this point, is it's not always best to go through just a bank loan. Right. Sometimes you've got access to other types of funds that may be exclusive to a piece of equipment or something else that you need. Can you talk a little bit about that?
Yeah, so I'm going to use your example if you don't mind.
Yeah.
You guys were looking to buy a piece of equipment, specifically a camera to go do a shoot. Because again, you guys were short a camera on a shoot. And you're like, hey, this shoot's coming up. We need to... Let's
just that whole rent versus own, and we're like, what? In our case, it makes more sense to own. Let's go.
Let's buy it. Let's get it done. Yep. So you went to your bank and they said, "Here's a 14-page application." Yep. You're like, "Wow, this is a second job." That's when your partner Andy picked up the phone and said, "Dave, this is what you do. Help me out."
Yeah.
At that point, you've got alternatives. There's this thing called the internet, right?
Yeah, so I've heard of it.
All kinds of lenders out there on the internet. So if you want quick money, but you want to pay a ton of money for it, right? In other words, your interest rate's going to be high, your fees are going to be high. There are lenders out on the internet that are willing to help you. They more help themselves, but they will help you if you can't get loans from anywhere else. They're called lenders of last resort, right? But when you're looking at equipment specifically, whenever you're in doubt of how am I going to pay for this, there's always that page on the vendor's website, right? That says, hey, here are our finance partners. Yep. And it's going to be a series of just, people who know the industry, right? In your case, this company was based in Southern California because you're buying a nice camera, really cool camera. They're based in Southern California. Guess what's out there? All the movie companies, they know cameras, they know video equipment, yada, 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 right? They didn't ask you. They weren't the small business banker in, Yokesville, Texas going, well, what you going to do with a camera, boy?
Yeah.
Right? They knew they knew the value of the camera. They knew why you needed it, right? And they quickly set it up. And since they're partnered with the manufacturer, they actually organized the shipping for you. So you got the loan, you got the money. It was a 10-minute conversation. You gave some basic information, and you got the camera shipped all in one fell swoop.
Right.
Sometimes, again, that's not the cheapest option, but it's the best option.
And in our case, in that particular example, it was not the worst option by far. And what was most funny about it is that we got a call from the bank, I don't know, a week later or something, wanting to follow up with us about the loan for the camera. And we were like, actually, it just came in the mail. We're unboxing the camera right now. As a matter of fact, to another company.
It was beautiful. It was beautiful.
We were literally unboxing the camera.
And they just had a solution for you. They didn't have money for you. They were just, we've got this other avenue we can take.
100%.
And it's like, I'm all the way down the road, man. I'm at the finish line.
Yeah, and you called that a captive loan?
There's some, captive finance company is some of them, and it's usually when like Honda Finance or Hyundai Finance is a captive financer, right? Otherwise, it's a third party. It could be a fintech, but depending on the product you're buying, they could finance it themselves, or they could outsource it to a vendor.
This is going to sound, I don't know, bougie or whatever, but I just bought an auto mower for my house. I got tired of mowing the grass 3 hours, 4 hours a week. Bermuda, like, oh, you got to cut it every 3 days, no more than every 7 days. I did the math. I'm like, I could save like 158 hours a year if I just bought this thing over here that actually runs for 5 years or more, and it'll pay. It did the math. So, okay, I can spend, $2-3 grand or whatever. This thing will cut my yard automatically. I can go spend more time with my family, do a side project for a friend or whatever it is. Well, you're just thinking through creatively about it and go, hey, this is more than justifiable. Like I can enjoy more time with what matters most to me. Yeah. And the company had just, again, a solution that took care of it at 0% for 6 months or whatever.
If you qualify,
and it was no problem.
No, and there's opportunity cost when it comes to these loans, right? Because your bank is probably going to always be the cheapest money. And I say that the fees and the interest rate and such is always going to be lower when you go to your bank.
Yep.
The quick 5-minute decision at a Cabbage or On Deck or captive finance is probably going to cost you some more money. But what's the trade-off? Right? If you're already working 16 hours a day to start up a business, do you really want to take on a part-time job now to fill out this 14-page application? And if they layer in an SBA loan to it, it's now a 21-page application?
Yep.
Sometimes the answer to that is yes. Sometimes the answer to that is no, I'm willing to pay the extra money, get me my money quick, let me get my things that I need and move on. Because I'm not going to have this loan for the length that I signed up for, and I'm going to turn a 2-year loan into a 1-year loan. I know I can pay it back in that amount of time. So I'm not paying the full boat interest. I'm only paying some fees and then a little bit of interest. So I'm good. So do the math, just like you did for the mower, right?
Yep.
Is this going to be worth it down the road or not? And then make the wise decision. Because again, you never want to go into debt, but if you do, you want to do it wisely.
Yeah. Okay. So for the young creative who's watching, the startup business that's watching, the person who is under that 2-year mark we talked about, how can they, whether they're thinking about starting a company or going out on their own, or whether they're just getting into it, what's the best advice for them at this point?
Yeah, so a couple things. First of all, congratulations for stepping out on your own. It's brave, it's noble. Go do it, right? The second thing is, you are a business. Like I said earlier, you're a business and a person, right? You're a creative and a business, and you need to treat yourself as both, and you need to put those hats on and act accordingly. So as a business, you need to incorporate, right? As a person, you have a social security number. You may have a tax ID, depending on how you came into the country. But as a business, you need to have an entity. You need to register with the Secretary of State. You need to be a formal thing, right? That legitimizes you. Now, if you want to be an S Corp and do business as a business just during the first small period, that's fine. But at some point, that 24 months kicks in, right? And if you've been doing your own thing kind of without an official corporation or an LLC or a C Corp or whatever, you're not a thing yet, business-wise. Only when you register with the Secretary of State do you become a thing. And that's sort of when the clock starts on the maturity of your business. So if you're a guitarist and you've been doing that for a number of years, but you've just been doing it, you've been getting, 1099s and checks, and you've been doing an S Corp kind of thing, formalize that. Because that means you can start writing off a lot more expenses. You can start, you come in as a legal entity completely different. You can protect yourself differently through insurance, right? You may not necessarily do that personally, and that's also part of finances. Am I insuring myself properly? Especially if you're going into homes or using somebody else's systems or software or computers, you need to protect yourself. So that helps a lot on that level. But it's usually that 24-month clock. If you just Google small business loans, you're going to see on the side of the screen different little offers, or at the sponsor area, different little offers, and they're going to tell you the conditions. Hey, you've got to make this much money a month. You have to have been in business this many months, right? The higher the interest rate, the newer the business.
Okay.
So because you're a higher risk.
Yeah.
Right. You don't have a history of finances. You may not have a history of business credit. You're going to be viewed as high risk. So the earlier that you can start that 24-month clock, the better. So if you're making money doing a thing, start a business. You may lose some
Even
money,
if you're at a
spend
day
some money.
job still and you're like,
Yeah,
go ahead and
especially
start the clock.
Especially if you're at a day job still, start the clock. Funnel money into that business. Get those losses going, because the first couple of years there's a lot more expenses than income usually. Show those losses, but also show some extra, some 9 to 5 income if that's your thing.
Yeah.
But yeah, offset those time factors to age that business, mature that business legitimately. I'm not saying cheat the system, but legitimately, if you're doing it as a business, get credit for it from a time perspective.
Yeah.
And it's huge.
My brain jumps to, what about DBA and all that? It's like, just, does that count? Or you need to incorporate, you said. So
you need to have that Secretary of State ID. You need to have that business tax ID.
Yep.
And that matters.
This is more of a question for a CPA, which we are going to have on the show. So guys, stay tuned for that. But I had a friend of mine who's a successful business owner many years ago, say, you really don't need an LLC. You can be a DBA with liability insurance and it's just as good. And I remember thinking, okay.
There are some businesses that, it kind of is just as good. If you're literally a sole prop and the only thing you do is produce intellectual property, a good friend of mine's a corporate trainer, and she works independently. She doesn't produce anything. She doesn't sell anything. She doesn't sell anything produced or create. You know what I mean?
Yeah.
She's the Lloyd Dobler of independent contractors. And so she doesn't really need it because her expenses are minimal. It's a laptop. And she has a laptop for personal. So why does she need, there's no extra stuff. At worst, she expenses a room in her house that's her home office. And that's it. So she doesn't necessarily incorporate. And it doesn't really cost her that much money.
Yeah.
Now, if you want to go full bore and, have the business own your car and pay this expense and that expense, then incorporate.
A car actually has its own LLC.
Exactly.
Just put that
Everything's in a trust. I own 47 trusts.
A foundation is what pays for the house or whatever.
But no, it again depends on the complexity of the business. The insurance really depends on how what you need to insure, depends on how many layers of corporation that you need. Okay. It can get complicated, it can get simple, but if it's just you and, a guitar, keep it simple maybe for the first couple of months. Make sure it's really what you want to do. Incorporate as soon as you feel, I can do this and make money and venture out on my own. Yeah. And then start the clock on credit. Okay. Yeah. Anything else, man? Any other words of wisdom that you'd like to leave with the people watching? Yeah, get a good accountant. That's if you walk away with nothing else, get a good accountant. If you don't take your business seriously, nobody else will. Boom. That says it all right there, man. Thank you so much, Dave. Really appreciate your time, man. Thank you guys for watching. We want to continue to bring you the best content around the messy collision of art and business. So hit subscribe, and we'll see you next time.